Welcome to the Titans of Industry show, and I have a phenomenal show for you today. Sometimes it's been said that the shorter the intro, the more famous and achieved the person is. So I would love to introduce everyone to Paul Matysek. And if you don't know who Paul Matysek is, he's a legend in the mining industry, and you should definitely research his name online. You will see that in an industry that is filled with and predominant with failure, this person is a serially successful entrepreneur with 5 different buyouts in multiple resources. That is almost, to my knowledge, there is no one else that has done what Paul Matysek has done. So that's the intro to this interview. Paul, thank you very much for taking the time.
It's a pleasure.
I would really love to ask you, first of all, about COVID-19 before we enter into businesses and stuff. We've never seen a situation like this before in world history. Literally, you have about 3.4 billion people in their homes and, told to stay put, work if they can. The children are out of school. Many industries are shut down completely. I've heard that Delta spends $60 million a day maintaining their fleet. And actually, they're emptying their fuselages because there's going to be algae inside of it. If they don't clean up their planes from the fuel, it's such a surreal situation. Considering that 1 month ago we were in all-time highs, greatest economy ever, et cetera, et cetera. What's the biggest takeaway to conclude from this type of a global event?
Yeah, it's an amazing time, unprecedented. It's a world where hugs and kisses are now weapons, and visiting and not visiting your family and friends is an act of love. So this has really turned the world on its head. For me, what it's shown that the world is going to be more connected. What happens in China, what happens in Denmark, what happens in South Africa, what happens in Mexico, it matters. It matters to all of us. There's a formation, I think, of a new social contract, one where we have to care. Businesses have to care for the world. The world will go on without us. It's obvious now as we live in our own cages. It's fine. The air is getting fresher. The grass is getting greener. And when this ends, and it will end, it'll be a new world order for us. We'll be delivering education in a different way. The way we work will be different. The way our healthcare services will be provided will be different. These are some of the things that are gonna change the world. This problem with getting ventilators and masks and sanitizers, there's going to be a deglobalization, I believe, and there'll be supply chains that will be more locally derived. We lived for many years in a just-in-time world where goods and services were provided just in time. Well, this virus has knocked us on our heads, and I don't think that model will work anymore. And the model of maximizing value will be replaced with business leaders that will have to do for the greater good. And I think that shift will change the way how we review good companies and what we'll invest in.
Very interesting. And obviously, we're doing this interview. You're in Canada. I'm currently in Israel, and we're able to do global communication so easy, and we get to see what is happening around the world, which made this really unique because it's the first televised global problem where everyone is focused on one solution. And that's what gives me a lot of hope, where the entire human race is for the first time looking at one problem, one solution to everyone. During this time, Paul, you've seen the response from government and from central banks in the US and around the world. Literally 20 minutes before this interview, Angela Merkel said that Germany, a country that is super scared of inflation, would do anything that it can to stave off the recession or any slowdown. We've seen much more aggressive action than in 1929, in 1987, 2000, 2008. Neil Kashkari was on 60 Minutes, the president of the Minneapolis Fed, and said, we have an infinite amount of cash. We're the lender of last resort. This is not a time to be overly cautious. We need to do anything possible. And I want to ask you, those types of amounts of money that enter the economy, not only on the banking level, but also at the average person level with helicopter money, are pretty amazing. Will this have an immediate impact on the price of gold, silver, other commodities?
I think more certainly it will. I mean, the amount of money that's being pumped into the world, it's inflationary, and if you add the stagnation, the loss of goods and services that are happening through the world, it is trending to stagflation. And when that happens, and not that the past is any indication of the future, but when that happened in the last global crisis in 1929, there was hard assets like gold did have increase in value, and I think that there's going to be, the price of gold, I think, will get to 2,000 before it gets to 1,200. So, I'm pro bullish on an increasing gold price.
Yes, and I think what's really important, Paul, this time is that there's both monetary stimulus and fiscal stimulus. In the last recession, the response was only monetary, and a couple of years later, we started to see that, hey, this doesn't cause immediate inflation. Here we have a situation where the entire country is going to get money to their pockets. So it's a very different situation. Many are speculating that the economy will be in a recession for at least a few months, if not a year. But the predictions I see are more stagflationary, which is
Yeah.
good for gold companies, low costs on energy and labor and high gold prices at the same time. And then you have these restrictions on corporate buybacks and dividends. So it looks like it's going to be murky for the general industries. Is this a good time to see a change in the mining industry's poor performance? The TSX Venture has gone down about 88% since 2008.
Yeah, no, I think it'll be very good for the mining industry in whole. I mean, the gold mining industry has been in like a bear market and trying to cut costs, trying to rationalize. So, this, lower energy costs, lower labor costs will all go to the bottom line. And I think that well-managed companies with sustainably environmental principles, with a good social consciousness, will do well in this environment.
Paul, for those who don't know your previous 5 exits in 5 different companies, would you mind in a few minutes laying out some of the previous times that you've had the good fortune of taking shareholders and bringing a lot of value into people's lives with
Yeah,
various companies?
sure, I do. Um, I'm more humble than that, but let me talk about a formula that I used. And in the last 12 years, I guess I've became either CEO or an executive chairman of 5 different companies in 3 different commodities: potash, lithium, and gold. And most of them was based on a feeling that, or an event or facts that would show that the price of the commodity would have a spike or would have a cycle in the positive direction. And that was probably no more evident in uranium in a company called Energy Metals, which was my first uh, foray into the public markets, and the price of uranium was hovering around $10 and $12. And I believed that it had greater legs than that, that we were entering into a uranium cycle boom. And I assembled a great team. I had a great uh, co-partner, Bill Sheriff, who had a database of uranium assets in the United States. And we just decided to become the largest owner of uranium assets in the United States, where they had the most nuclear reactors. A lot of this is just common sense. Most of my deals, you can see, wow, why didn't I think of that? So we believe that if we own those assets, and that if uranium went to $50, we would make sure that we'd maximize the value of our shareholdings and our value of our company. So in the space of 3 years, the price of uranium went from $10 to $120. And we were ambitious enough to take over 3 companies, and we had pounds in the ground. We had far advanced assets, deeply developed assets. And the price, when eventually went to $110, we became trading on the New York Stock Exchange. And our market cap went close to $1 billion from a $5 million entry. And then I thought that the uranium price was overheated, and I managed to sell the asset to Uranium One, and for, I think it was $1.4 billion in shares. So it was a matter of technically executing, having a financial background, the momentum, and we executed that in the space of 3 years. It was an amazing project. And the similar type of methodology was used for potash. Again, same principles. Potash was trading in the low 80s and 90s, and there was a desire for potash, and from humble beginnings, from again a 20 or $30 million market cap, we developed from 3 holes, which I spotted, a massive deposit. We went through the permitting stage, got a mine permit, and we eventually found a buyer to the world's oldest potash company, K+S, for $450 million. And they subsequently spent $3.2 billion and employed thousands and thousands of people, and they put that mine in production. So, my closest corollary to this gold market is Gold X, which has a lot of similarities. Gold X was called, Gold Rock, was called Mansfield Minerals, and I took over management. I brought my team together again, and we thought that we could right size this project, and that we would look for an opportunity when the fortunes of the country, which is Argentina, and the price of gold would go into our favor. And so we made a number of transactions, and you can read about them from CDI, to get to a point after 3 years to take this to a place where Fortuna, Silver and Gold, bought this company for like a 6 times our entry price, and now they're just about to put this in production. So again, I've done the similar thing with 2 lithium plays in Argentina. So again, it's just using, trying to find a deep valued asset, looking at what needs to right size it, getting enough exposure to it, and trying to develop it or sell it in a metal market that is rising.
Okay, and Paul, you've recently made news by becoming CEO of GoldX Mining, formerly known as Sandspring Resources, which is a development stage company. Tell us a little bit about where does this formula that you followed, how does it play into this situation? Because I've been following GoldX Mining for a while, and I'm really interested in what you saw in it.
Well, first of all, it's in a jurisdiction, Guyana, which has 700,000 people. But it was a poor country, but recently it's found some offshore oil and gas. It's going to make it like the Saudi Arabia of oil in South America. And the government's committed for infrastructural building and to assist its population. And that's good news for resource companies. And so that's one thing. Number two, I thought that Guyana, I've worked there previously, was a totally underexplored country, and that there's a lot of value in that, find more mineral deposits in that region. Number three, Sandspring, and now Goldex, had done amazing work on developing a 7.3 million ounce deposit, with measured and indicated and inferred of over 3 million ounces. And they've also had the great fortune of having three great shareholders. Grand Colombian, which owns 20%, Frank Juster, I think, believes 10%, Brian Pace Braga owns 10%. So 40% of that company has been financed by these three individuals. And they believed in the vision that I have in moving this company forward. There was a recent PEA, and it's highly leveraged to the gold price. Let me just get you some exact numbers so that I can give you there. So at $1,300 gold, this project from the PEA has an NPV of $495 million and an IRR of 20%, a payback of 3 years, and a free cash flow of $1.25 billion. At $1,500 gold, it's got an NPV of $760 million, an IRR of almost 28%, a payback of 2 years, and a free cash flow of $1.7 billion. And today, this price, the market cap of the company is $50 million. Okay, that's where the deep value is. And my plan is to right size the feasibility, try to do trade-off studies, work on the financial and the technical end to bring more, deep discount value to the shareholders. I think it's extremely cheap at this price. And if you're looking at deposits that have this many ounces of gold, and this is for an open pit resource. So that is why I've put my team back together to look and extract value from this asset.
So the news that you became chairman and CEO was April 1st, and
Yes.
the stock is already up about 30 or 40% as we're doing this interview. So obviously, there's a lot of confidence in the fact that you and your team will be able to monetize, de-risk, and extract value from this project. What is next for Paul Matysek and for Goldex Mining for 2020 and 2021?
So again, we're looking at a feasibility study. We have looking getting a mine permit, trade-off studies, looking at our other resources. Obviously, with a higher gold price, we can put more ounces to bear. I mean, the PEA contemplated 175,000 ounces a year. It was a capex of 378 million, but we've negotiated the previously precious metal agreement with the Wheaton Precious Metals, and we have access to 108 million. So we're going to look at trying to lower the capex to 250 or so that we can put this thing into production. And I think it will be a race to production to take advantage of a spike in gold.
Very interesting. If you don't mind, how will potential shareholders listening to this interview, how can they make a judgment or an assessment? How should they look at the potential value of a company like Goldex Mining?
Oh, they can look at ounces in the ground, market cap. We're putting together a PowerPoint that looks at different factors how you can assess gold companies, and that should be on our website shortly so they can look at it. But it's extremely relative to our peer group, and that's what we're going to work with it. You'll see that we're highly undervalued.
Paul, very interesting. The website for everyone to go check out is goldxmining.com.
Correct.
Paul, thank you very much for taking the time today.
You're welcome. It's a pleasure.